What's up, everybody? Welcome to the 5K options journey. This series isn't about flashy profits, fake gurus, or turning 500 into $1 million overnight. This is about structure, discipline, risk management, and documenting every trade in real time. Wins, losses, mistakes, patience, all of it. The goal isn't to look perfect. The goal is consistency. As you can see, I deposited $5,000 into my Thinkorswim account. I'll be using Trezor to track all my trades. This is the most perfect and most accurate. You can't fake your trades here. Now, my approach is centered around structure, patience, and risk management. I'm looking for clean moves away from key levels, not forcing trades in chop or consolidation. A quick overview of today's price action. May 13, 2026. 2 minutes until market opens. Ideally, what I'm looking for now is price in the compression zone, then a breakout to the upside, retest, and then we go ride the momentum. Anything between the red line and the green line is our compression zone. Now, I didn't get a chance to actually record my entry here, but a ticker that did align with our thesis was Meta. Now, on the left-hand side, you can see my strike price and my P&L. Bottom right, you can also see it as well. Meta has broken out the compression zone. I wanted a break and retest. The market provided a break and retest. The higher time frame structure is bullish. At this moment, I've entered the trade. My stop is that swing low, and my price target is a 2-to-1. As this trade plays out, it's nearing my stop loss. So it looks like I'm going to get stopped out this trade. However, the game plan is either hits my stop loss or it hits my 2R and above, and I get out the trade. No interference. I don't know what's going to happen. Right now, market looks weak. But like I said, the game plan is either it hits my stop loss or it goes in our favor. So here I just sit on my hands and continue to watch the market. This is where FOMO kicks in. Is HN near our stop loss? I could have easily exited out this trade and then watch this thing reverse and go to the upside. Then eventually I've missed the trade, right? And to avoid all that, the simple rule in place is either it hits the stop loss or it doesn't. It goes in our favor or it doesn't. Today I really had to execute or really demonstrate my patience. Market was trending, entries made sense, and market overall structure aligned with our thesis. Let's fast forward a little bit. Okay, here we've broken past our 1-to-1. We've broken past 1.5. Now here things didn't look too good. The market began to retrace aggressively. Now this trade could go back to zero and hit my stop loss, and it could be a losing trade. Or just sit through it, follow my rules, stay disciplined, and watch the market grind up to my price target. And there you have it. Took profits, followed my game plan, was not influenced by my P&L, was not influenced by the market pulling back. Very decent trade on this one. And we'll see how or what presents itself for tomorrow. But it's going to be the same thing over and over throughout this journey. The same consistent setups, the same approach, the same visibility, what we're looking at, what we're looking for, compression zones, break and retest, drawing our zones, and taking profit gradually. In today's session, May 14th, we had a strong market overall. There's still some moments where patience mattered more than forcing entries. Let's get into the morning session. Now, coming in, the QQQ and NQ were both showing overall strength. The higher time frame structure remained bullish. The price was holding above the 100 EMA. So main focus today was continuation opportunities. One thing I'll be emphasizing heavily in this journey is understanding market environment. Just because there's an 8 and 13 crossover doesn't mean there's a trade. Early in the session, we had movement, but I wanted a clean structure and confirmation before entering anything. The two main things I was really looking at, or two main tickers, were QQQ and IWM. Now, I was hesitant on QQQ because we're near the highs, right? So the main key is really just to buy on the pullbacks. IWM showed a lot of room to the upside. However, there was a lot of chop at that zone, and we never broke out that compression zone. We get the move that we were looking for, a clean break out the compression zone on QQQ. Once price came back down, reclaimed structure, and held above that key area, that's where things started aligning. The key takeaway here is we have a bullish higher time frame context. Price is above the 100 EMA. We're in an uptrend. Momentum confirmation and continuation structure forming on the 5-minute as well. At this point, the goal wasn't prediction. It was purely execution. Now that I've entered the trade, the main focus right now is trade management. So once the trade was entered, everything was already planned out beforehand, right? Defined stop, predefined target, no emotional interference. One thing traders struggle with is wanting to micromanage every candle. But during this testing phase, I'm allowing the trade to either hit the target or hit stop. No guessing, no moving things around emotionally. Long term, that's how you collect real data and understand whether your edge actually has expectancy. And with that patience right there, my price target was hit. I exit the trade, and it's a good trading session. Looking back at the session after hours, the biggest thing that stands out wasn't really the actual result, right? It was the patience before the move happened. There were moments throughout the day where price was consolidating and moving sideways, but waiting for alignment made all the difference. I'm not trying to hit home runs throughout the duration of this journey. It's just really about building consistency over time through disciplined execution. Some trades will hit target, some trades will stop out, but every trade gets documented, reviewed, and tracked. Appreciate you guys watching, and I'll catch you in the next session. Final trading day of the week, Friday, May 15th, 2026. Today ended up being one of those sessions where the best trade was no trade. And honestly, that's something I want to emphasize heavily throughout this series. A lot of traders feel pressure to be in the market every single day, but professional trading isn't about activity. It's about execution when your edge is actually present. 15 minutes into the market open, and I'm looking for anything coming out of the compression zone. And I'm not seeing any ticker, Nvidia, Google, but overall nothing. Coming into the session, the market felt extremely indecisive. We had a movement intraday, but there wasn't any real continuation or clean structure behind it. There were moments where it looked like price wanted to push higher, then immediately faded. And in my case, the overall market is below the 100 EMA line, right? So my bias today was simply to short the market. Same thing, as I mentioned, to the downside. The overall environment just lacked clarity. For my approach, specifically, I'm looking for alignment. So I wanted a clean structure, the momentum, the confirmation, and in a clear environment. Today just didn't provide that. Market spent most of the session moving sideways and reacting emotionally around those levels instead of expanding cleanly like we had these past 2-3 days. One thing I'm trying to stay consistent with throughout this journey is separating wanting to trade from actually having a trade. Those are two completely different things. And I think it's important to document these sessions too, not just the winners, not just the exciting days, but the quiet sessions where discipline matters more than execution. Because realistically, this is what trading actually looks like sometimes. So that's a wrap for week one. Overall, this week wasn't about hitting massive trades or trading to force unrealistic returns. The main focus was execution, discipline, staying consistent with the process. This week we finished green overall, but more importantly, I stayed aligned with the rules and the structure I'm trying to build long term. Some trades followed through cleanly, some trades didn't fully expand the way I expected, and some sessions didn't provide an edge at all. One thing I'm learning more and more throughout this process is that consistency isn't built from forcing trades, right? It's built from patience, managing risk, understanding market environment, and staying disciplined when the market is slow. And that's something I want this series to stay honest about. Not every day is exciting. Not every day is clean. Sometimes the best decision is sitting on your hands and protecting capital. That's still part of the professional trading. Right now, I'm focused less on dollar amounts and more on building reputable habits because long term, the process matters more than any single trade. Anybody can get lucky for a day or a week. I've had that many times. But the real challenge is staying disciplined over months and years, decades. But I'm also continuing to track trade quality, market environment, my max R, and overall execution. The goal is to gather enough data over time to truly understand the expectancy behind the system, not just emotionally react to short-term outcomes. All right. Appreciate everybody following the journey so far. This series isn't about pretending to know everything. It's about documenting the reality of trading, the patience, the discipline, the decision making, and the process behind it all. We'll continue showing the wins, the losses, the no trade days, everything. See you guys in week 2. Thanks.